All righty, you guys should be able to hear me, even though I'm talking to myself today. Welcome to the Hurley Investments Market View Commentary for Monday the 19th. Next week on the 26th, we are not having a commentary because it's Memorial Day. We will be pushing that into Tuesday. So Tuesday next week, we will be having a Hurley Investments commentary. Monday, enjoy Memorial Day. Have a great week off. All right, let's get started. I already got Memorial Day. Moving it to Tuesday. It's probably good I'm recording this because, to be honest with you, oh my gosh, I was up all night last night. When it comes down to it, I was up till 1, checking futures, checking the European Asian markets, up at 4, going off of 3 hours of sleep because of the problems that I was going to assume we were having today. Thank goodness we did not have those problems. In fact, we still have 14 minutes until the market closes. Let's go to the watch list. Alphabet's only down a quarter. Apple's down $3. Some bad blood between Apple and working with Alibaba. Baidu's down 39 cents. Boeing's down 94 cents. Ford's down 6.5 cents. Let's go to some of our other ones. Banks in general, JP Morgan's down $2.43, but I thought Bank of America was up, right? Bank of America's flat. Boy, they were up 40 cents at some point in time. Meta's only down $1.54. Started down over $14 earlier. Microtechnology is up. MicroStrategy is up. Nvidia down 20 cents. Dang it, they were up earlier. The only thing we did is we did put 135 long puts on Nvidia for their earnings next week on the 28th. To be 100% honest with you, it cost $7.55, which was about $4.30 cheaper than last time we had to put puts on Nvidia. So it's nice to see that after their split, option prices are rebalancing and they're actually doing what they're supposed to do. So a pretty overall good day. Verizon was up earlier. Verizon's still up 24 cents. Disney's down 94 cents. Compared to where we thought we were going to be, not bad. Not bad at all. In all honesty, today, even though the Dow is up, well, no one follows the Dow, let's face it. The Dow's up a little bit. I should be looking at the S&P 500. This keeps the S&P 500 today off of overbought, and we're probably going to be dealing with this just for a little bit, trying to see where we're going to get our next relief from. And the relief will most likely come from a tax break or a rate cut. And let me put the NASDAQ in here just to take a quick look at the NASDAQ as well. NASDAQ composite. It's also on that overbought. So a little down day like today actually does help our market out. It's good to see this. I will put where we close into our notes because obviously I don't have them right now. All right. Credit rating was lowered. And I don't want to say that it doesn't matter, but August of 2011, Standard and Poor's lowered to A. Crying out loud. Wish it could be a little bit easier for me. Standard & Poor's lowered to A plus, and then Fitch in 2023 lowered to A plus. Then last Friday, Moody's lowered to A plus. So far that Bennett said that this was a lagging indicator. And of course it was. But here's the question. Is someone going to not invest in the US so they can go over and invest in Germany that has a better credit rating? Probably not. Their GDP is awful. Their inflation is not doing very good. Their growth is not doing very good. Their stock market is. I mean, it's killing us right now. But are other countries moving to Germany for their bond funds because they have a better credit rating? The answer is no. And it's no because of the government. Switzerland has a much better credit rating. Are people flocking to Switzerland for their bonds? Anyone piling into their bonds? No, because they don't have the volume. They can't sell enough bonds to match the demand that's out there from countries. It's just not available. They just don't have the opportunity. They can't. Short and skinny, yes. Bonds look more attractive by almost a quarter point, and the 30-year is back above the holy 5% interest. That was the holy grail. The holy 5% interest. People could put money in. They can't run the calculations on 3.5%, 4%. It's always been 5%. That whatever number usually increases the amount of investment into the US. Reasons why? I guess it's easy math, but a nice number when it's tax-free for US citizens / companies. The returns are tax-free. So a couple of people asked me recently, why are we still in Mag 7 stocks after the big loss and now the credit rating is lowered? It's simple. They don't need to borrow. For crying out loud, they've got hundreds of billions of dollars. Is future, and I should put this in here, future loan risk of higher interest rates going to be important to the Mag 7 stocks? No. In fact, this is a buying opportunity for any and all of them across the board, except maybe Tesla. This is a huge buying opportunity. I'm not saying don't worry about it. I worried all weekend. I'm going off of 3 hours of sleep. I'm sorry I'm doing this recording, not talking to you live, but my family has things going on tonight with kids into school and so forth. I've got a ridiculously busy week this week. Got to be a dad, right? Got to be a dad before everything else. But we're in Mag 7 stocks, and it's an opportunity because these companies don't have the future loan risk that all these other companies do. They can self-fund whatever the heck they want to. They're good. They're 100% good. And that's why we still like them. That's why we added shares to well, just about everything, but Google and some Apple. We added shares to Micron, Nvidia. This is why. Okay, what else do I have for you here? Let's start with the U.S. deficit. What the heck? Okay, this is for a single person. And the funny thing is, I'm talking to the person, I'm not going to name names, but you're already overseas, you're not here in the US, you live in England, you think it's better over there, more power to you. But I'm shocked at the comments you made. Whose deficit is this? And in your email, your comment was Trump. And I'm really glad we're not talking with people today, because there is a problem within the United States. And the simple problem is we're all too goddamn stupid when we hate someone. We can't seem to look at facts. We can't seem to look at real numbers. We can't seem to adequately right now judge what's happening in our country. And we're so polarized, man, we're going to be giving psychiatrists decades of work in the future. And I know I'm only talking to one person right now, but I'll be honest with you, I've been so frustrated with some other people that I have probably said some of the wrong things. But whose deficit is this? With all due respect, the deficit that we're going to run this year was voted upon and submitted and approved by Joe Biden in the 118th Congress. This is nothing to do with Trump. Trump had no part. This is where he was handed a deficit from the previous administration, the previous Congress. I kind of giggle because the Trump haters blamed him this first year when he was elected, and again, that had nothing to do with him. And then, of course, when Biden took the first year, that was all Biden, but it couldn't be related to Trump previously. It's just like, oh my gosh, people. We vote on this crap and it's handled before October 1st, because that's when the new fiscal budget goes in. The $1 trillion deficit this year is 100% related to and submitted by Joe Biden. He could have vetoed it. That's what is real life. Please look at real facts and figures. I'm going to make another comment. The fact that Doge can cut about 1.1 trillion, and that new resources of what, 400 billion are going to border security. Means that Doge may be able to lower the deficit by, I'm going to say between 6 to 750 billion. And again, those are some facts. That is what real life is. Man, personally speaking, I want them to gut the government. I know there are some programs that people have used. I want the government gutted. That would be my personal opinion. I want to pay less taxes. I want to do more with my money. I want to run my business with the current rules that are in place. I don't need micromanaging. Not saying my industry doesn't deserve micromanaging, because of course it does. There's so many bad eggs that have cost people millions and millions of dollars. Yes, there needs to be some government. I just feel right now it's overdone. The government is just overdone, and the more we can cut out of the government, the less we have to pay. I mean, I would make restrictions on welfare. There's a lot of changes I would do. I would also, if you're gonna, if you need welfare for more than a month, I'd have government offices open where jobs, I guess I want to see more to the states where people can help earn. If they can't get a job, there's a government job for really low pay, but enough that it'll give them the food that they need. Personal opinions. I'm just a little set off today by the email that Trump's deficit will bankrupt the United States. This isn't Trump's deficit. We have like 36 trillion from all the previous presidents, including Trump, but not quite. Just look at real facts and figures, for crying out loud. A little worrisome. There are some talks right now about retesting the lows and a 45% chance of a recession. In all honesty, I've had a talk with a couple people. By the time we are in the recession, it's already too late because we know it, and we're usually coming out. We are most likely in a technical recession. It would not surprise me to see the GDP numbers negative going into June, but what an amazing job that we've seen a president do to create over $1 trillion of business in the Middle East. I mean, out of all places in the world, Qatar, Syria, United Arab Emirates, Saudi Arabia, what an unlikely place full of money to pull business in from. At least it caught me by surprise. I was a little bit shocked. To pull $1 trillion of business in from there, absolutely unbelievable. All right. Someone asked me about meta auto trading or auto trading in general and thoughts. And I'm not saying that all auto traders are bad. but all auto traders are bad and will lose you the majority of your money really quickly. There is for two reasons. Auto trading is a day trading, momentum trading type of I don't know how you say it. It's just a program. Algorithm trading, auto trading, it's just a program that does a bunch of trades based on a pre-programmed algorithm or criteria. Every trade creates a taxable event to the highest possible tax rate for the individual, which is typically earned income. That is the problem with auto trading. Number two, algo trading and auto trading are very easily messed up with volatility or news or new management, new presidents, new anything, and it goes to hell in a handbasket. I made the suggestion that this individual go take a look at trustpilot.com. I believe that's where we had it at, because trustpilot.com. These are a couple that you want me to look up under the meta trading auto trader. Kind of funny because here's what I learned previous and post the big drop. Post the big drop, plain and simple, someone lost 40% of their portfolio here. And I'm going to let you read this. The algorithm stopped trading, zero activity, no help. I mean, for meta trading, this was awful. But I also pulled one other one that was prior to the big drop when things were running, and I'm going to let you read this as well. But the short answer is, prior to the big drop and during the big run up, it didn't perform well at all. And you can click on these, emotional, click and follow, click and follow. There's hundreds of these that are out there. It's interesting because you can see the bots that are there, and you can see the ones that are real people. There was not a new big picture at 4 o'clock this morning. So let's see if they put something new in here. Nope. The briefing.com big picture has not put anything new, so I'm just keeping that one in there. I will put the new pictures in for the markets just to see where we ended up. Let's do the NASDAQ. NASDAQ finished up 0.02. Thank goodness. The SPX finished up 0.09. And again, I know people keep saying, why do you even look at the Dow? The Dow is what, 31 stocks. It is the TV. Hey, everything is, oh, for hell's sakes. Everything is okay. And it finished up. So all three indexes finished up on the third and final downgrade, where we no longer have a perfect rating for the U.S. government and fulfilling its obligations. Where do I think we're going to end? I'm still going to go with 2%. Earnings, not a whole lot of earnings this week. Trip.com, JDH, Palo Alto Networks, Toll Brothers, Lowe's, Target. This is the first week of our retail earnings. Pretty sure it didn't start last week. Yep, this is the first week of our retail earnings. that come again with Target. I'm going to put Lowe's in there, Ralph Lauren, Intuit, Ross Stores, Buckle. By way of economic reports, leading indicators today, initial claims, continuing claims, existing home sales, and new home sales. We really don't have anything that's going to move the market. So for all intents and purposes, we're news driven for this week. Don't forget, Monday is a holiday, 3-day weekend. Thursday and Friday, you're probably going to see very light trading. You might even see it on Wednesday. So we're going to get to light trading. You're not going to be making decisions based on Thursdays or Fridays activities. How am I looking to trade? I'll be honest with you, we're mostly letting things run as we have since companies' earnings. Not a whole lot of protection out there right now. All right. Questions, that was last week. I'm going to keep that in there because that's pretty accurate. Pretty interesting. Chip Roy, a Republican, is warning that the big tax bill moving forward is a scam. I was like, oh my gosh, poor Republican support again. Well, it's a scam because there's still a ridiculous amount of entitlements in it. So it's not a scam because it is the same bill that just pushes forward the 2017 tax cuts. It actually, I think it, boy, I don't remember what it does for child tax credits, but there's too many entitlements. If he had it his way, he'd have a lot less entitlements. The White House announces a $600 billion Saudi investment in U.S. during the Trump visit. Just putting this out there, it's part of the $1 trillion that's there. A really interesting article shows what we're doing to, let's face it, what we're doing to allies in a very volatile region that have treated us nicely. Tom Lee, see the V-shaped recovery and getting long these washed out stocks. The neat thing is we have been in them since the start. He's saying since May 12th, which is basically 4 weeks after the recovery. He's now saying to get into washed out stocks. Part of what we do is that we use the long put to act as insurance, and we then take the profits and buy more shares of stock. Pretty neat that Tom Lee, who is a very experienced trader, 4 weeks after the bottom is saying it's time to get into washed out stocks. Don't worry, we've been in the whole time. He's listed a couple here for you if you're interested. I would say that there is some definite fundamentals that should be looked at. But with that said, let's face it, the last 3 months, we've probably been in a sentimental market. House Republicans advanced Trump's SALT tax bill, but the SALT deduction still undecided. State and local taxes, the limit should be closer to $30,000. I think it kind of sucks that we pay taxes on taxes. That's what Trump is trying to eliminate and push it higher. And then the inflation breakdown. I wanted to see how we had lower to negative readings on inflation. It's all in here. There's some really good charts. There's a really good explanation. Where is the chart? I probably need to cut and put the chart in. But a really good amount of what's come down. Egg prices and fuel. Another good article here on the 30-year Treasury jumps above 5% after Moody's downgrade. Just everything I told you before and how this might be the catalyst that gets us those 2 or 3 rate cuts. If our interest rate is too high, the FOMC can cut those rates and lower it if we need to. So guys, I appreciate you being here with me and letting me give you a a recording. Thank you very much. I'm going to get this out posted to you guys so you can receive it and have the notes. Busy week with kids, graduations, a senior in high school, state soccer tournaments, blah, 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 blah. So thank you for giving us leeway. Appreciate you guys. Look forward to seeing you not next Monday, but Tuesday. Have a great week, and I'll talk to you then. Bye-bye, everyone.